shares. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician Hour, January the 30th. We're looking at the Dow, up 59, up 60 points. Just wanted to show you this. Look, here's the 1 minute chart of the E-mini. Since it crossed positive in the last crossover right there at 9:09 this morning at 4:053, it stayed green, and here we are at 4:075. But look what's even more important here. You know, I like to talk about a two-click session. Unfortunately, this one I didn't get because I had some technical troubles. I was on the phone with the trade station. I couldn't get this middle chart that you got here. I've got three screens up here, and this middle chart has all the stuff I look at intraday and monthly, etc. I have these windows. For some reason, when I saved it, it went to the left side and overlapped my left side screen, which has all sorts of other things on it. So I had to get there, and of course the fix was just so easy. All I had to do is go File, and then go to, where was it? Open charts, let me see, Windows. Yeah, Window, right here. Open Desktop, that's it. And then I just clicked on, it was just, I love this. Actually, I had the same thing with a garage door the other day. It wouldn't close. Just suddenly the light went blap, 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 you know, and then it doesn't close because there's something with the little eyes at the bottom that was in the way. And I thought about this, and I thought about, I did this and I did that. And I thought, this is going to be such an easy fix. I figured it must be the wires because I had seen some squirrels suddenly running away from the wires the other day. So I finally thought, oh, God, I'll call the garage guy. So I called him up, and for $199, he bent down, he took a little piece of tape, and he taped up the wires, and 10 minutes he was gone. So I love fixes that, you know, I mean, I didn't have to buy any parts, anything. I can't complain. I should have fixed it. I knew it was the wires. I just didn't know if I wanted to mess with it. But most importantly is the same thing here. One click, and I'm all fixed. So anyway, what we've got here is, this is going to be, so far, it's like a two-click session. And the 10-minute chart just went positive at 8:10 this morning, and it's still green. And your leg C, it should go to a leg D. It got back all the downside move from last night into this morning. I remember at 88. What was it? 88. 4,088 last night. I'm saying, oh, okay, this is great. Now it's going to be coming down, and it did go down. And then what do we see? We see this turn, and it's just spectacular. But, of course, this is the end of the month. And within the end of the month, the last 2 days, if the market is positive, then you'll start to see some more buying come in, and maybe even the first 2 days of the next month. And then it kind of settles down. So we're going to be watching to see if that happens right here. Let's get back to the markets, and enough prattling away here. So I'm going backwards. So the bonds are up 3 ticks, but you can see here it's gone to just the nominal leg B in the weekly chart. I think that bonds at this particular point, the question came in, what was the exact question? In your good opinion, have you the 30-year bonds bottom longer term or too early to tell? Well, this is what I'm looking at. It's really hard historically to get the genie back in the bottle. That is, if inflation starts to rear its ugly head, it's really hard. Why? Because it takes time for the concept that businesses are going to raise prices and then all of a sudden lower them as there's a disinflationary aspect. It takes a long time to do that. At the same time, we've got a real conflict here because the job level is still very, very low. And yes, we're seeing lots and lots of advertising and lots of discussing about layoffs, etc. But at the same time, I mean, where were we? Oh, we went to down in Somerville. It's like the border of just as Cambridge extends towards Boston, you got Somerville. You go down there, well, there's this assembly row that's been built over the last couple of years, and that was there was nothing there. It was really just a wasteland. And now you've got these. It isn't just the discount stores like shoe stores and places, but you have box stores, the real thing, all over the show. And there were people, you could barely get parking, and that's down in the Boston area. A few weeks ago, we went down just for a kind of a walk in the Natick Mall, out in Natick past Framingham, about 14 miles, I'd say, from maybe 16 miles from Boston, packed. So I don't see the signs, and I always go, again, there's a really good sense of recessions when the stores start to put advertising and they say sales and sales and sales. There are not that many sales going on. So I think that this is a very interesting question. What's going to happen with the yields? What's the Fed going to do? And I think the Fed can only follow, look, they're historical purveyors. In other words, they're not going to anticipate. They have to look back and then do an analysis. So they're always going to be late to the game. That's the nature of the Fed. So as I look at the chart, the 30-year T-bond monthly chart says, let me just open this up. We've had a huge kind of an arch or inverted V-shaped pattern. We've gone a number of months below the monthly chart, below the October 2018 low of, I think it's changed. I've got it written as 123, but it's actually 123 and 26 seconds. So we've got 123s is okay. It rallies all the way up to the 170 in March of 2020. It runs all the way to 183s. And it comes all the way back down, takes out the 123 low. It goes all the way down to 117 and a half. It's called 117s. And it rallies a little bit. My thinking, this is the T-bond. So the yields do the opposite. So let's go to the yield, TNX.X. I don't know if I've got this updated in the monthly chart. Yes, I do. Went to a peak D above the 32.48 high. Let me just double check if that hasn't changed. It's called the 32s. In October of 2018, plunges down to 3.98 in March of 2020, and now it is at 35.27. Remember, you've got to put a point in, so it's 3.527. And it's at peak D, and it's holding very nicely. The 9-period moving is above the 14. The MACD is good. Stochastic strong at 84%. I don't have volume here because this is not a volume. It's just an index. So it says there's a chance that we could bounce and retest the peak D. But at this particular point, there's a consolidation phase going on. And that's the reason why I'm saying that I don't think yields at this particular point are the issue. But I do think that there's a chance that the yields, the rally in the yields in the short to even intermediate term, and I have to say intermediate term takes me into February, suggests that yields are slowly coming down. The upside momentum has diminished a little bit, and that's all I can say. Is this the low? On I don't think after 31 or whatever it is year rally, you'd expect some kind of a digestive phase. I'll be back in a moment. Guys at 63 S&P down to Basil Chapman.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so what I'm doing here is I'm doing the left side, right side price time match. That's bar symmetry on the 30-year T-bond, 30-year T-bond interest rate. And I used to have this notated from way back, and then they, for some reason, every once in a while, they just stop giving you the full data. Certainly at TradeStation. So I don't have the full data anymore. And I used to have this all notated going back to whenever it started. I could get it from the very beginning. Anyway, I've got peak A, peak B, peak C, and we've made a peak D in the 30-year T-bond. This is the interest rate. And we're looking at the high that was made back on, right there, on the second, this is February of 2011. And I've got it going all the way back in a big cup formation, a lopsided one. But I took the midpoint of December of 2016, and it comes out exactly to the month of the high right there. And that just says, yes, we've made a particularly important high in the short to intermediate term, but long term, I just can't say. It does look as if it wants to pull back 36.38, that's 3.638. It could go down to the 3.237 level, but this could be a trading range. And that's really the issue. The issue right now for me is that we've got bonds kind of not in the way of anything. They're just there. All right. Now, what's really important about this particular phase as we see it right now is that let me just run these again. So right now the Dow is down from the little bit of a rally that it had earlier on. It made a low this morning of, this is the cash, but the futures were down much more. But the low this morning was, let me just double check on this one here, 33,855. We're now quite a bit above that. We did hit 34,000 again at 34,055. Now it's pulled back, it's up 45. But you can see that little doji candle there. That gives a lot of information for us. And it's basically saying it is a doji leg B, gray leg B, because the stochastic hasn't gone to 80%. It's at 69% right now. But it's both, basically the Dow is in a rectangle formation. It's just going to be trading there for a little while. But the S&P, that's a little different pattern altogether, in the sense that the 4,100 double top high in December pulled back very sharply to 3750. And Friday's high was just under. It went to 4094.21. Not bad. And today, we're coming back nicely. It's down 16. But you can expect a little bit of a consolidation. But here, the technicals, the MACD's good. Stochastics at 92% on-balance volumes lagging. Little gray on-balance gray relative strength index is good. The weekly charts are starting to improve. It is finally above the inside track repellent zone, and it should try for a leg D, and that would be above 4100.96 this week. Looking at the weekly chart, let's wait a monthly chart. We'll wait for Tuesday as we're getting into the end of our show. That'll be very close to the end of the month, end of the day, and we'll be looking to see what happens, because will this extend? This is going to be the big question. Will this extend gray leg A by tomorrow going above 4100.96, or do we have to wait until February where it has a little quick pop and it starts a leg B? If that leg B for all of February is just a minor move above peak A, you got to be careful. If it's a strong move, a powerful move, it gets into this candle. Remember the August high of 43.25. If it gets anywhere into the 4170s in February, that's going to be a very, very good sign. I'm just going one step at a time. Short term, I believe I said subscribe to my opening call. We're expecting a pullback. We've got buys in on any pullback. We didn't get our entry prices on what was missing today. Some, in fact, have rallied quite nicely, but the day is young. We'll see what happens. Meantime, so with no shorting at this particular point, only buying. We're looking at the QQQ coming back a little bit better. It's down 3.53, just off the lows, but it's still at 292.75. You want to see sometime this week if it can even touch 298. That'll be excellent, excellent action. We're going to have to wait to see if that's possible. But I love the fact that last week it went out for the first time. And in fact, for the very first time in quite a while. When I say quite a while, I mean from that September when the QQQs were at 307, plunging down to 254. This will be the first time that 9 period. We've got a whole week to go. Not even 1 hour into the first day of the trading week. So we can't talk about this. But the L did show up, meaning that the 9 did go over the 14 in the weekly chart. That's the first time since September. Now, we're also looking at the monthly chart, but we'll talk about that tomorrow or Wednesday because you'll have wrapped up the month. And now we're looking at is the IWM, and I've been impressed with the IWM, excuse me, the Russell 2000, the way it's been moving, the steadiness that it's had, and the fact that if this is the fourth week now, it can close anyway. It doesn't matter, but it's the fourth week that it's been above the both the green 9-period moving average in the weekly chart and the very sharp down channel to the downside, and we've gone above that. Excuse me. And the monthly chart, we don't have to talk about that just yet. What I think is really important right at this moment is if you look at gold, down just 2 now at 1943, basically what it's saying is I've had a fantastic move since I crossed positive the green 9-period moving average all the way back to right there. And that was on the 8th of November. And that was at, let's go to the high of the day, 1751. The low was in the 1600s. And we're now 1943. And the green is still very sharpy. So this says it either takes time for the price to come down so that the green eventually goes under the 14, or it keeps holding. So what I've been saying is gold is holding very well. This is not just you and me or anyone else buying gold. This is not just banks, not just funds. This is countries, I think, that have been buying gold because that's the way, and just the price movement and the action based on that 9-period moving average as a propellant, and occasionally it would touch it, very seldom would even touch the 14-period moving average. That is very intense buying. And to get that to change into a sell signal or even get close to thinking of a sell signal, I would have to see 3 closes below 1931, the 14-period moving average. And to get the 9 to go under the 14, I'm talking about 1880, 1890, somewhere around that area, you'd have to see gold. So far, this is holding well. It's been the place to go to in the big money. This is the way I'm looking at it. I could be wrong. I haven't got pure evidence other than the chart that I'm looking at to say that. And if you're looking at silver, look how it's held steady, but look at the way it's formed this arch formation in the daily chart right here. I'm trying to get that. There it is. Right here, there's the midpoint. I drew this blue line in to say, let's see how many prices close, how many times the price closes on a daily chart above the blue line, which is at about 23.80, and how many times it starts to close underneath the blue line. And that says, weight of evidence says, now you're starting to see selling pressure, but you haven't seen it yet. And the weekly chart says, yeah, same thing on the weekly chart. I'll be back in a moment. I just wanted to see if the dollar is starting to move a little bit. It's gone from 0.02 to 0.01. It's at 101.96. And let's look at natural gas. Natural gas is down again, down 11 ticks at 2.73. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So I've had a number of questions that while I'm doing this, is it possible just to show some of your technique live? So what I wanted to do earlier on, for some reason I was so busy I didn't do it. I wanted to say that there were 2 parallel highs in the 10-minute chart. And therefore, I wanted to take one of them and make it a phantom peak because we deal in quarter points moves. Therefore, it's possible we could have got a little nick. It could have been a penny in any other medium. And therefore, I want to be ahead of the game. So that should have been a phantom peak A. One of these should have been a phantom peak A. I chose this bar right here at 720 to 730 with a high of 408.50. This should have been a B right here. I should have done it live because I was about to do it, and then I got sidetracked. That would have been a C, and I would have been ahead of the game by saying no. C goes to D in the Chapman methodology. But if you've already identified that there's a chance of a C, lighten up and look. If you look at the 1 minute chart, we had a peak C1, C2, phantom peak right there, double top. So be careful. Now, this particular pattern that looks like a little mini channel going down, price is like in a glass tube. You can see it, and it just ping pong balls from the upside to the downside, low highs, low lows, low highs, low lows, all within a channel. Often pops right out for one quick move up. It depends on how active that buying is, but it has at least a quick pop up, but you don't quite know when it's going to be. You have to watch other technicals. But since this was a peak C1, C2, it gave you a heads up to be a little bit careful right here. That I did draw in, and you could see that earlier on. So within that context, let's just get back. So what we're looking at is 40.50 today. Is going to be really important. This morning, I should say, is going to be really important support. And another push above 40.78 would be really impressive action. Back to our story here, and what we wanted to look at was in the den, we had one denner, at least a couple of denners actually congratulating another denner on a choice of SoFi Technologies. This is online banking, and they have financial solutions. Capped up today, it's up 13.6%, up 81 cents to 6.74, right at the 200-period moving average. Probably going to stall a little bit there. Leg B in the weekly chart. A lot of stocks have had absolutely, I mean, this is at a 50% or more move from the low in the fours just a couple of weeks ago. And a lot of stocks have done that. And that's this rotation that I'm talking about. I do want to get to this. There was a question, and I wanted to cover it because these are stocks that I've been asked over the last week, not all of them, but most of them. A, B, and B. So this is Airbnb, goes to a leg E on Friday, probably a peak E today, stalls at the 200-period moving average. It's at 111.72, down 4, but the 112.80 is the 200-period moving average in the daily chart. Spectacular move. It's gone from 81, was it? 81.91 on the 28th of December to the high of 100, what did I say, 117? 117.12. I would say that that's a pretty darn 30-point. That is a fabulous percentage move. Now I think we can start having a little bit of a digestive phase in many of these stocks that have come off that have been horrible for 2022. And now in 2023, the first month of the year, in January, have had fabulous moves. So yes, this looks good, but I would have to say, I want to see it hold. It's 111. 106 to 103 is absolutely critical support over the next 2 weeks. If instead of pulling back, it travels and touches 120.50, just invites that 120 area to come active again, because it's been there many times before and then it fails, that's going to be important. That's Airbnb. Amazon. Amazon has had a spectacular move from the 81 low that was made on the 6th of January, ran all the way to 103. Let me just check. Yeah, 103.49 on Friday. Down today, down 2.80 at 99.42. It's the same story. Give a little bit of room on the downside. I would say a close below 91 says, uh-oh, very, very poor action. But holding above 95 this entire week and having one more attempt to go to a leg B, at least having an attempt to go to a leg C at 103.50 or higher would be very good. Looking at the other one, which was T-Doc. I hadn't looked at that for absolutely ages. T-Doc is Teladoc Health Inc. Has a really nice rally off the 2160 low of the 6th of January. Runs up to Friday's high of 2958. Pulling back today. I think it should go to a leg D. Here again, same thing as all the others. The 26 to 25 area needs to be good support, because if it closes under 2450, it says, uh-oh, false move. But right now, it says just trying to get off the low, and it was a stock that was in the 318 or something. 308. Oh, this had the round number highs. So many of these had round number highs on the monthly chart. 308 round number high. Unbelievable. And that goes back to, I think, February of 2021. Let me just put it in, then I'll check. 2021. Let's go there. Yep, February 308 round number high. There's a little bit of a pullback. Goes to 21. I'll give it a couple of points, 21.60. Okay, so just be a little bit careful. It's a start. And all of these, Shopify, all of them in the same category, just decimated. Had fabulous rallies off the low, end of December, beginning of January. And that went from the 32 area to, it's at 47 right now. It hit 51, I think, or just under 51. 50.17 on Friday. Yeah, little digestive phase after coming off the low. Very important. Now, so I did those. Now the question came in. Yes, so UNG, the question came in. On Friday, you had said UNG was very dangerous, but this is the first time that it's at least showing that it wants to, it's just attempting a rally. And if it takes out the low of Thursday, that's a real problem. Let's see what the low of Thursday was. This is United States Natural Gas Fund, had a low of 9.15 on the 26th, popped up all the way to 9.32. Woo! And then today's low is 9.23. So that 9.15 a low is so far held. Is this really a buy for UNG? I'm just saying, I would prefer to buy strength, have it make higher highs and higher lows. But you're catching a falling knife here. It's just too dangerous. And I don't see the many other places to be right now. So trying to get something coming off a low is very important, yes. But remember, stocks that make lower lows and stocks that make yearly lows tend to continue doing that until there's a major change. Stocks that make yearly highs tend to do that until there's a major change. So just be real careful. Dow's now down 26 at 30, at minus 30 on the Dow, on the S&P. Let me just look at my chart here to say what happened. Yep, this has not yet, it's still in this narrow down move, but you see where the 9 period crossed a negative at 10.17 this morning at 4,070 to 4,066, and here it is at 4,054, and that's the reason why I use phantom peaks. But you've got to know how to use that. And look how this phantom peak gave you a peak D in the 10-minute chart. We'd be waiting for that leg D, but if you use the phantom peak correctly, it gets you out at least on most of your position. You can then put a tight stop, and here we are from the 4,070s to the 4,050s. I'll be right back. Basil Chapman.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So there's a pattern that I talk about is called the cup and the arch. These are the patterns that we look at all the time. So most importantly within that, look at this pyramid formation. Look at this. Look at the price point. Look at this plumb line, perfect plumb line, right there. In the 1 minute chart, I love to show this. People said, could you just show some of the techniques live? Yep, I don't mind at all. Look at this left side low that was made at 9:30 this morning at 4,053. Spirals up to the little double top peak C1, C2, acts like a D at 4,078, round number high. And what do we do to the exact, well, I can't make this up. There's nothing here that I could say, oh, I'm looking back in history and look at that. This is live. I mean, look, the number of bars on the left equal the number of bars on the right. And there wasn't a smash or a crash or a cascade down. It just went steadily. The number of bars equal the same number of bars on the left to the right. Isn't that fascinating? Now you've got almost an Eiffel Tower in the 10-minute chart, straight up, straight down pattern. So let's just go back to a couple of questions that came in here. Let me just, where was it? Could I look at FTU? FUTU is Futu Holding. I can't remember what it is. Is this a Chinese company? I can't remember. However, it's trying to fill the gap. There's a huge gap between the 29th of December, the low of 57.58, and the following session had an inside bar with a higher low, that is, of 57.50. That's 57.58. The next day, the 30th of December, boom, it gaps down. The high is round number 49, and look at this. It's tried to fill this, and it's taken all this time. It's impressive that it's been able to rally this strongly. And let's see, does maybe it tells me what it is. No, okay. So FUTU is it's arching over. The 9 is over the 14. The MACD is good. Stochastic's very good at 87%. The weekly chart has got almost this Eiffel Tower, looks straight up, straight down, but then it stopped at about the 2/3 way, maybe a little bit more. So the question is, I entered puts last week, February 10th expiry, considering it broke the EMAs this morning. Yes, the EMA is below it, but the EMA is still strong. So I'm looking, think of it as a silver chart. Just let me show you something. SI. Look at that. It's rolling over. Here are the technicals. The MACD is very weak. The stochastic is very weak at 55. The 9-period moving as today, just gone negative, and yet silver is still in this containment area. Look at the same chart, FUTU. It's also making this arch formation. Yes, if you're not used to it, it looks like a completely different chart. But if I had to expand this, if I had to get rid of, I wonder if I can do that. If I had to get rid of the gap, there. You see that pattern? How it's arching over, but it's still technically good. But here, the MACD is good, stochastic's good. So this is a little different. I think it can test 49.70. So if you have puts, that's no problem. But I think that what we're really looking at is that it's in the financial area, and the financials have actually been holding a little bit better, and I'll go to that in a moment. So I'm just saying to you, I think you're right, but I'm also thinking that you're not going to get that much of a pullback unless by today's Monday. By Wednesday at exactly this time at 10:46 a.m., I would say if it hasn't gone below 50.30, it's at 51.65. If it hasn't, it doesn't have to even close. It just has to hit 50.35, and I'd even say by Wednesday. This is just going to be in a sideways trading band. So you don't want time, you want price. Time is just going to say if you had a move that say if you had the options, essentially saying it's a static sideways move, I want to get the premium diminution in the calls and the puts. That's one thing. This is a little different. So I'm just saying to you, you need speed. You got speed today, down 2.56, but you have to have follow-through speed by Wednesday afternoon at the latest, 50.35. If that happens, then immediately 49.70, the 200-period moving average, then becomes a magnet. And at that point, you might see the 9-period moving average flip to pink. That's what you want to see. So I hope that helps you. Next question came in is WHR. So WHR is Whirlpool. Another one that I've notated for years and years and years. Never had a trade on it ever. But I've always followed it because it gives you a lot of information about the housing sector and building and what's going on. In this particular case, it's trading at A, B, C, all inside. Monthly chart, peak A, peak B, peak C, and then it stopped there. So Whirlpool trading right now at 154.81, up 71 cents. It looks to me like Whirlpool on a daily basis, you always have to move to the left to see that you do identify the lowest low bar from which you can start a move up. And I'm calling this a B. And then I'm going to check to see if I've got it right after all these years of looking at the highs. 142.50, 142.49, 1 penny. I put the peak B because my eye said there was a peak there. You might have missed it because you haven't got used to identifying peaks and troughs. D, E, at F, at just about at the 200-period moving average. This is a gray A. This is a gray B because the technicals are not strong enough to give it a buy signal officially. Yeah, so I think Whirlpool is telling me that as a kind of a conservative position, if you are long, I don't know if you were long, earnings tonight. Ooh, that's really tough. All right, I don't play the earnings. I used to do this, and in fact, we had some nice things. Once in a while, we'd have an options. Once had a fabulous move. Oh, we went short something that had the earnings of Renix there. It was one of the parts, not AAP, but I'm getting Orly. That's right, O'Reilly. And wow, it just. I didn't even know it was earnings, but I said it looks very poor. Let's go short, and we made like 100 points. It was so bad. But I've stopped for a long time because it's how the market. What happens if we've seen this before. You're absolutely perfectly correct, and at 4:20 the news comes out, and you're short or you're long, and the price spirals up or down. But by the call, the earnings call. And the sorting out of everything at 9:30 the next day, it's completely against you. I just don't need that anymore. It's not worth it. I'd rather wait and see. So right now, if you didn't tell me earnings were out, I say there's a really good chance that 158.89, the 200-period exponential moving average, is beckoning it in a rectangle formation like this, and that the only way that this would fail if there was a close below 148, and it's a 155.31 right now. Just this pattern, because it would make the H pattern, instead of having higher highs and higher lows, going towards the previous peak high, and that was at about 159, let's say, about 2 weeks ago. So that, on my eye, would say it's trying to go higher, and the weekly chart would go to a leg D. It's not great, but it looks like it's holding very well. That's all I can do. So I have 150 February puts. I didn't see it. Oh, wow. All right, I have to come back and talk about it because that's live, that's actionable.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, just let me say this before we wrap up today, and check out my Opening Call, my daily newsletter. But we had some dinners go long. One that went as long as 40.41 in the E-mini. It ran all the way to 40.80. It's fantastic. And then went short at 40.77, and here it is pulling back. If at any point today, I had already spoken about the early morning, what the key support is. If it goes below 40.38, it says just be real careful here because there should be buying that holds, not buying that is just emotional. And if it starts to go, you want to see, if you're a bull, you want to see 40.73 again by noon. In the meantime, back at the ranch, we're looking at WHR, which is Whirlpool. So everything that you've got puts, and it's a little underwater right now. I would say this is if it was me. Personally, once I'm wrong, I'm wrong. I'm just done. I don't have to mess around. I've got you've still got cash because it had a little bit of a pop. I don't know. You should have some money now. Take it a little bit off with the loss right now if you want to hold it, because it is what happens at 9:30 with Whirlpool. My thinking here is that from everything I've read and everything I can see, that whatever the earnings, whatever it is, it's the outlook that they talk about. And I suspect that the outlook in Whirlpool should be a little shaky. And that's really what you're depending on. So if you're not going to get out if it's after 4 o'clock this afternoon, after the close, you have to wait all the way till tomorrow. So it's earnings tonight. You've got the February 150 puts. You've got all. You see, if it's the 150 puts, that's if it was 155, I'd say to you, I'd take the chance because you're going all the way to February. But I just say, take a little money off so you've got that cash. And then if you want to hold it, that's fine. You've got all the way to February. I think that you, at some point going into February, Whirlpool will dip underneath 148. But that goes February the when? February the 17th. You got some time, but I don't know if I want to sit there worrying about it. So I'm just telling you right now that I suspect that whatever the earnings are, it's the outlook. The outlook is poor. This thing will drop.